Jordan, good to see you. We're going to start with a big question here. Fee only versus commission based. Which is better for your financial plan? So we're going to talk through the differences and how the fees can affect your retirement savings. Jordan, you are a financial advisor. How do you make your money?
Believe it or not, Aaron, that's not the first time I was asked that question. People want to know, how do I pay for these services? How do you make a living? And I want to explain that. Really, there's two major ways that we as a firm make a living. The first way is if we would recommend, based on the plan, based on that tool fitting your overall financial portfolio, a product that is insurance based. So if it's maybe a life insurance product and it makes sense because you want to leave a legacy to your family and you pay, that company a certain amount for that life insurance, we do get compensated directly from that insurance company in the form of commission to accomplish your goal. The second way we as a firm make money is by managing your assets. So if we are managing your assets, the more money that you make, the more money that we make, and we have a management fee on those assets. So some people, they're maybe more conservative and want to use investments that have no management fee and they have no risk, okay, market risk. Some people want to use funds that are more aggressive and they have a management fee. But the key is we just get to know the person, see what the plan dictates, see what their preferences are. And then those are the two ways that we make a living. One thing, just on an office perspective, we never blind someone with the cost. We never send them a bill that they weren't expecting. We have to fully educate, explain the plan, know what you're getting, how you're paying for it. And then those are really the two ways.
Mm-hmm. Well, I'm glad you brought up something important. An advisor who charges you a percentage of your managed money does have a vested interest in your success.
Yeah, so I see some firms out there, not saying it's good or bad, or they just charge for a planning fee or a one-time service, and that's great. They have a plan, but in my personal opinion, that plan just got outdated tomorrow because the market's changed, life changes, the economy changes. So when we are managing someone's accounts, or any financial advisors managing accounts on an ongoing basis, they have a vested interest to do good for you, to do well for you, because the more assets you grow, the more money they make. And to be frank, on a personal note, the more referrals we get, if we help people and we grow their assets, that's how our business grows. Whereas someone just recommends a one-time plan, that's a transaction, that's a one-time plan. That's not really transforming their overall life.
And one more thing that I'd like to underscore, because I think it's important, as a fiduciary, you are very transparent with the fees that your clients are paying.
Yes, we have all the fine print, all the documentation, but on top of that, you have to articulate that to the client. Know what you're getting, why you're getting it, how it fits your plan. Oh, and by the way, this is how we get compensated, whether it's directly from the insurance company, whether it's a management fee that's taken out of your account. Know what that fee is, know how we get paid. And I'll be honest, most of our clients, I would say all of our clients or most of our prospects, they're 100% okay with that. You want a fair deal. The one illustration I kind of talk to clients on is, if you need a brain surgery, do you Google the cheapest brain surgeon in the area, or do you want to get the top brain surgeon because you know he's going to do a great job? You want that brain surgeon to be paid, and paid very well, because they do a great job. I'm not saying I'm a surgeon. I'm not saying I'm a doctor, but I don't believe we're the most expensive. We're definitely not the cheapest, but we try to provide the best value for our clients. And that's what our commitment is to our clients.
Great. And I'm glad we were able to talk this through, because I think a lot of people wonder how this works. So, Jordan, if somebody has any questions and they would like to give you a call, how can they reach you?
Yeah, I'll even take that one step further and say, if they want to give us a call at our main number, that 847-499-3454, we will analyze what they're currently paying in costs. Some people don't even know it. Some people they have this annuity, they're paying 3 to 5% they didn't know about, or they're paying more in management fees than they didn't think they were paying, or they're in a fund that they're paying on extra fees that they just don't see to the naked eye. So we will complimentary analyze what their costs they're currently paying. We will complimentary create a plan, and then we will fully, as a fiduciary duty, educate on how, if we were to take over that plan, how we would make a living.
Interesting. All right. Hey, Jordan, thank you so much for your time today. I appreciate it.
Thanks, Aaron. Appreciate it.